Welcome back to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec. On Monday 27th of January, looking at euro dollar, which has continued to slide actually. It's a really downtrend channel that is really starting to take hold. The number of bearish candles that we are seeing forming on euro dollar and the magnitude of those bearish candles are growing. You can see in the last 7 or 8 sessions what we've seen is this magnitude of the negative candles compared to just the minor slight positive rebounds that we're seeing. So when you do get an update, it is only a slight update, so that would really point towards selling to strength, and you can see this downtrend channel which is beginning to really take shape now. Market trading towards the bottom of the channel, so perhaps that might suggest a little bit of limited immediate downside potential, but you'd definitely be looking at selling into strength, I think, on euro dollar. Having broken down below 110.65, that becomes the basis of resistance. All that overhead supply from those key lows in December and subsequently through January lows as well before the breakdown. So you've got this nice band of resistance actually, 110.65, 111 figure, which I think would be the next point at which you see the next lower high. And I think the market is tending towards testing, I think, 109.90, maybe 110 figure, that being the old sort of key pivot area through September, October, November, where we saw these old lows and rebound highs often turning around in that 20 pip band. So that's your support area there. Now you've got the momentum indicators which are turning increasingly corrective. Look at those MACD lines. They are the most corrective that you've seen pretty much since, well, I suppose you'd argue November, but they weren't as accelerating as they were in November. That was more of a just a mild corrective move, but accelerating lower now. The MACD lines are sort of spreading, which would really suggest the selling pressure is growing. You've got stochastics bearishly configured, and RSI 35, that's the lowest since October as well. So it really does all point towards selling into strength. Now you've got this breakdown at 1065, well on the hourly chart 1068, but effectively 1065, rally failing around 1060, so that really obviously is a resistance area. Of old support becomes new resistance, and you've even on the hourly chart here this morning, you've got the fact that the market is sort of failing around the 1040 mark quite consistently, and you've got the hourly RSI failing around the mid-50s area. MACD lines again underneath neutral, not really looking as though they're going to be coming above neutral. So any intraday rallies are a chance to sell, and I think pressure on 109.90, 109.80. If that breaks to the downside, you're looking at, wow, 109.40, but then essentially 108.75, that key October low. So it really is beginning to accelerate to the downside and really come under pressure. So I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.